Kim Chipman from Bloomberg News. I have a broad question. I'd like your thoughts on how the debt crisis in Europe and the broader worldwide fears related to the crisis might be affecting the talks and also the markets and attitude towards the market.
Okay, I'll start and then Dr. Khan can add or correct as is necessary. Two questions with two separate answers, I think. The first is the impact directly on the markets, and that is visible in the level of prices that we see within the EU ETS at the moment. They are extremely low. They are not unprecedentedly low, but that was a precedent particularly from the first phase, which not many people thought we would be going back to. And the reason is pretty simple. Levels of industrial production are, as a result of economic uncertainty, extremely low. As a result of that, people don't want energy. As a result of that, people don't want emissions. As a result of that, people don't want permits to emit. So the market is doing exactly what it said on the packet, if you like, when we introduced this, at a time when there is no difficulty in keeping emissions down. The price of a permit to emit is going down. Now, there are plenty of sort of secondary arguments about whether that's a good thing, how long it would be a good thing, whether, in particular, people who are allegedly not investing at the moment are doing so on the basis of just looking at today's prices rather than future prices. But the most important answer to the question, how is it affecting, is directly that. But your second point, I think, is, if anything, more interesting, because I think that the perhaps the larger effect, and certainly the most direct effect as far as what's going on in Durban is concerned, is the increased unwillingness of finance ministers, chancellors of the Exchequer and so forth to put their hands in their pockets for direct public sector contributions to the various funds, particularly the funds which are to be administered by the GCF. And we've seen a number of comments on that already from developing country negotiators who have reminded the developed countries that even though there may be sympathy with the economic position that they're now in, that is not to be regarded as a justification for not meeting the promises which were made in Copenhagen. And I think the way that that plays out over the next week or so could be extremely important for our ability to achieve any significant progress here in Durban. When you've been promised money and then somebody says, look, I'm awfully sorry, I can't quite provide you with that at the moment, it's always a nerve-wracking moment. Dr. Khan?
Thanks for that reply. I think there's very little which I can add to it, but except for the fact that, there's a lot of debate going on the word of like mobilizing. What does mobilizing $100 billion entail, right? So what's the role of the private sector in all this $100 billion? What is the incentive for the private sector for moving in, right? So these are the kind of questions which are being asked and for which there are very little answers right now. Thank you.
Okay, any other questions? Yes, over there.
I did not right understand you. You said there's low production, so the prices for emission permits are low, but the emissions are rising very fast. Last year, 5.8%. So, what I think that's doesn't fit together. How do you fit it together?
I'll try to. Sorry, just as a courtesy for all of us, you are.
Georg Ehring, German Information Radio, Deutschlandfunk.
Okay, thanks. As always, it depends on the baseline. You're still seeing emissions in Europe and maybe elsewhere tracking upwards on the basis of a baseline which is affected by, I don't know whether I ought to say the last recession, but 2008. But remember that the market is looking at a period ending in 2020. It may have its vision a bit obscured about what happens towards the end of that period, but ostensibly anyway, people are working out what the price should be on the basis of an expectation of what the demand will be, not just today, but all the way through to 2020. And the answer we get when we look at the prices is that there are a lot of people who believe that the problem, in other words, a lack of demand to use energy, a lack of demand to use fossil fuel energy in particular, is going to extend a long way through into that period, 2020. There are some optimists for the European or the global economy who say that the market is allowing itself to be scared by just today's circumstances, and that 2020 is quite a long time away in the future, and things surely could get much better than that. But markets are and prices are what the collective, quotes, wisdom of the market say they are. And at the moment, the assumption is that over that period, there will not be a need for a lot more emissions permits, even if right at the moment we see from a low base an increase. They're not expecting effectively that increase to continue in a way which was intended when the level of reduction as a target for the European Union was originally set 2 or 3 years ago.
I think we had a very interactive discussion this morning, and to follow with our questionnaire, you can always check in their website that we are going to post the press release as well as the few slides that demonstrate what we have found so far from the online survey. So I think we just have 2 or 3 minutes left. I think it's time to close the press conference. And again, thank you very much for your participations. It's a pleasure to have you here. If anybody have any questions, please contact us with the contact detail that we have on the press release. Shasha Metan and myself will be happy to answer any question you have. Also, today is our first day of IETA that we kick off our side events. I have brochures here if you would like to pick up a few copies. We also have them available at IETA booth. So thank you again, and with that I would like to conclude our press conference.
Actually, I'm going to say one thing, if I may, without getting the security guards coming and take us away. I reckon, up to you, but I reckon the story here is actually these gentlemen on my right. At a time when people are looking at the European carbon market and sort of saying, well, that's a bit boring, isn't it? It all seems to be going nowhere. We have, admittedly based both in London and New Delhi, but particularly with an Indian flavour, a new approach, a new organisation, and a new set of markets based in Asia to be looking at, existing today, being traded today, and expected for tomorrow. And I think that, frankly, is the big story here. Thank you.